Hello, everybody. Welcome to Proprietary Trading. My name is Robb Reinhold. I am joined by Mr. Darren Fischer, who is the CEO of Maverick Trading. And Darren has a ton of experience in this industry, so I definitely would love to hear from him. But I really want to go through the history and evolution of prop trading. And let me just quickly start off that when I use the term prop trading, that's just a short market term for proprietary trading. So don't be confused by that. Prop trading is proprietary trading. Now, I've been a trader since the mid-90s, and it's really interesting how the market has changed and how the industry around it has changed. And we're going to be going into a lot of those things that have changed, but we're really going to be talking specifically about how the world of prop trading has changed and how it was back in the 80s and 90s, how it was in the 2000s, and really what it's evolved into. Because one of the first questions we always get from people that don't know the industry is, what is proprietary trading? And so we wanted to do this session to really bring that out, talk about the history of it, how it came about, how it works, and really what you should look for if that's something that looks like you want to be a part of. If you want to be a prop trader, what are the things you should look for in a prop trading firm? All right, so let's go ahead and jump into this here. Now, before we just jump into prop trading, banks, broker-dealers, all this stuff, I really need to get some terms out there. And one of the very first things you need to think about or know about is how the market works. Now, I've got this titled Market Participants. So in this market, there are millions and millions of participants. And each participant has a different role in the transaction. So if you go back all the way to the history of the New York Stock Exchange, before there was even a building there, on Wall Street and Broad Street, the word got out that if you wanted to trade stock certificates, you went there on Lower Manhattan. And so they went there, and that's where you would buy and sell stocks and other things from people. And that became a pretty popular place. And became so popular, they had to put a wall on the street to keep the livestock out. Now, it's funny because Wall Street got its name from that, and it was supposed to be to keep the animals out. Some people say it's supposed to keep the animals in the trading floor, but that's basically where they built the New York Stock Exchange. So that was an exchange. Now, to be able to go into that exchange, you had to be a member. Very, very exclusive. And memberships became very expensive. And pretty soon, the average person was priced out of being able to go into the New York Stock Exchange. So, basically, what evolved from that were companies like Goldman Sachs, Merrill Lynch, Morgan Stanley. These were companies that had seats on the exchange that would go in and make transactions for you. Now, these are called broker-dealers. So when you hear the term broker-dealer, this is simply a company that has access to the markets, to the exchange, and they will enact transactions for you. So again, if you are a customer of E-Trade, TD Ameritrade, Merrill Lynch, they are your broker-dealer. So the broker-dealers are in there in the markets making trades all the time. Now, technically speaking, the public, you, myself, hedge funds out there, they are not in the market making trades. They are sending orders to broker-dealers, and the broker-dealers are going to the markets to make trades. So as you can see here, these broker-dealers, they play a big role. And they have lots of regulations they need to follow. And for their services, they are paid a commission. So they're going to charge you a commission to do business at the exchange. Now, the last group I want to talk about of market participants are the market makers. Right now, market makers, their role is actually really, really important. And I always get the question from people who don't really know how the market works is, Rob, what if I go to sell a stock and there's no one there to buy it? Okay, well, that's totally impossible the way that these markets work now. Market makers are companies that are in there and they are making a market. What that means is they must always be buying and always be selling. They must always have a bid out there and they must always have an ask out there. And their job is to facilitate liquidity. meaning that when everyone is selling, they need to be on the other side buying. And when everyone's buying, they need to be on the other side selling. So market makers help create liquidity. Now you ask yourself, who are the market makers? Well, again, these are companies as well. Now, companies like Morgan Stanley and Goldman Sachs, they are going to have market maker divisions. So there'll be divisions of these big banks where they are doing market making. There's also going to be smaller companies, private companies that are just in the business of market making. So the reason the market makers are there is that when all the orders are coming in from the broker dealers around the world, the market makers are there to create an orderly market where people will get executed on their transactions. So whenever there's a big supply and demand imbalance, it's the market maker's job to go in and balance out the other side. So this is how the market works. So whenever you, me, a hedge fund, we are simply sending our instructions to broker dealers, and the broker dealers are the ones actually facilitating the trade and taking care of the transaction. So again, I just wanted to go through that really quickly just to make sure everyone understands, because these are a lot of the terms we're going to be using in here today. All right, let's talk about how the exchanges of today work. Now, as I mentioned earlier, the New York Stock Exchange had a very not so noble beginning. But today, the New York Stock Exchange and the NASDAQ, they're considered the major stock exchanges. Now, of course, we have other exchanges where other products are traded. We have the CME, the Chicago Mercantile Exchange, where a lot of the commodities are traded and the interest rate products. We have the New York Mercantile Exchange, where things like oil are traded. But we're just going to talk about the major stock markets. Now, 10 years ago, I would have had to put the New York Stock Exchange, the American Stock Exchange, and the NASDAQ, but the American Stock Exchange got bought out by the NYSE, and they basically closed the building of the American Stock Exchange. So right now, we really just have the NYSE and the NASDAQ. Now, this is where people think this is the market. That is not true. The market is much, much bigger than this. There are things out there called ECNs, Electronic Commerce Networks. Now, ECNs were really the first thing that allowed me and you to trade online. Back in 1997, this is when I started trading. I was one of the first traders at Maverick Trading. And the way that we would make trades is we would make trades through these ECNs. Now, these are just small little exchanges on their own, but they are inside of the umbrella of the New York Stock Exchange and the NASDAQ. However, you can now go and facilitate a trade on one of these ECNs. For example, in the past, you would send in an order to buy 100 shares, and inside the New York Stock Exchange, it would match you up with someone wanting to sell 100 shares. And if no one wanted to sell 100 shares, one of the specialists there, which is the market makers on the NYSE, they would sell you $100 or 100 shares out of their pocket. Now, before technology got where it is today, this was the only way to do business inside the exchange. But they set up these electronic commerce networks, ECNs, and it allowed the small trader for the first time to go in and make an order. So again, you could send your 100 share order to ARCA. And if there's anybody on the other side selling 100 shares, it would execute the transaction, and these transactions were under a second. They're fractions of seconds. Whereas if you send an order to the New York Stock Exchange, remember, they were still using phones back then. They're still calling on the phone, walking down to the pit, making the trade. It might take you several minutes. Now, when Maverick first started out, this was the world of trading. And I remember in our first trading platforms, you had to say where you wanted your order to go. So you would have to go out and look on what's called a level 2 screen. A level 2 screen is where you see all the bids and asks. So I'm going to draw this out real quick here. So basically, the level 2 would allow you to see everyone's best bid and ask. So again, you'd see ARCA was on the bid wanting to buy 1,000 shares. That means if I wanted to sell 1,000 shares right now, I could sell it at ARCA. But again, you had to look and see where the shares were available on these exchanges. Now, real quickly here, I'm just going to talk about SOs just for a second because SOs was really the first thing or the first book that was ever written about the small trader and how they could access the market. It's a very old book called The SOs Bandit. And the SOs system was called the Short Order Execution System. Now, your shares had to be under 1,000 shares. You could do 999 shares, but you could send it to the SOs platform, and they put you in the front of the line. So if there was a lot of people or a lot of institutions wanting to get into a stock, and you put an order in on the SOs system, you went to the front of the line and got your execution very, very quickly. So back then, trading was really more about execution than it was about reading a chart, than it was about supply and demand and Elliott wave theory and stochastics. It was more about execution. Now, what happened is once these ECNs got popular and once level 2 got popular, all the institutions started hiding their orders. And the level 2 no longer was working. And then we got the next addition to the exchanges of today, the dark pools. So I know many of you have probably heard of dark pools. And basically, dark pools work exactly like ECNs. Exactly like ECNs, except for one thing. They do not publish their bid and ask. So when we look at a quote, so if you go and you look at a quote on Microsoft, again, Microsoft is going to be quoted. It's going to say, okay, the bid is 110 and the ask is 110.02. So what that's telling you is that someone is out there buying at 110, someone's out there selling at 110.02. That's what it's telling you, the best bid and the ask. You are seeing the best bid and the ask from one of these exchanges, or again, the New York NASDAQ or one of these ECNs. However, there may be someone buying at 110.01 in one of these dark pools. And the way these dark pools work is you don't get to see them unless you pay them. That is the key. If you want to have extra liquidity, you want to be able to move shares where no one can see them, you've got to pay up for access to these dark pools. So what happened is a lot of the trading went into these dark pools. Now, it doesn't mean it's totally dark. These do get reported to the NASDAQ, and they are included in end-of-day volume, but we just don't get to see the best bid and the ask. So we don't get to see all the liquidity out there. So again, this is how trading used to work. It was definitely, as you can see, it was more about execution than it was about reading charts and using technical analysis. All right, so again, I wanted to explain how markets worked. I want to make sure everyone has a good understanding, at least the basics of how the market works. Because now we're going to talk about what is a trader. And the funny thing is this is one of those terms where everyone could tell me kind of what it is. But when it comes down to being very specific, there are lots of different types of traders. And so what we're going to talk about, we're going to talk about people that actually facilitate trades, people that actually make trades in the market. First one, we have the market makers. We talked about them. Their job is to simply create liquidity. They're not really trying to make any money other than buy on the bid and sell on the ask. So that's a market maker's job. Their job is to, again, on Microsoft, buy shares at 110 and sell them at 110.02, and do that all day long as much as they can, as close together as they can. Their job is to create liquidity, and that's really what they're there for. So again, there are people that have jobs as traders, and they are market makers. Now again, a market maker is not trying to read a chart. They're not trying to make a couple bucks on Microsoft. That's not their job. All they're doing is to buy off the bid and the ask, try to make the spread, and create liquidity. Next, we have an execution trader. Again, there are people on Wall Street. There are people in New York and Chicago that are execution traders. Basically, they are order fillers. As I said earlier, remember, when you want to facilitate a trade, or when a hedge fund wants to facilitate a trade, they're actually going to send their order to their broker-dealer. So broker-dealers are going to have traders, and these traders are going to fill orders. They're going to get orders come onto their desk. They're going to say, okay, we need to buy 10,000 shares of Intel. And so their job is to go in and buy 10,000 shares of Intel. Now look, they just don't go in and hit buy at market. They, of course, have to be smart about it. They're going to buy at the right prices and try to get the right fill. But again, they are not trying to make a profit. They are trying to get the order filled for their client at the best price that they can. It's up to the client to determine when they should actually get out of it. But for that trader doesn't care about where the stock is in 4 days. It doesn't matter. So again, as you can see, here we have two traders, market makers and execution traders. They aren't even concerned about reading a chart. That's not their job. Their job is to just facilitate and place orders. Next, we get into a proprietary trader, and we're going to really, of course, focus on this. A proprietary trader is someone who trades for a firm with the firm's capital. Again, that is just the most basic definition of a prop trader. It gets a little bit more complicated than that. We'll go into that. But basically, a prop trader is someone who trades for a firm with their capital. Then you might have a professional trader. Now, these professional traders are actually kind of a dying breed. When I was on the Chicago Board of Options Exchange in 1998, I met a couple of these traders, and these were people that owned a seat on the exchange, and every day they went to work and they traded their own book. They traded their own capital, they traded their own book, and then every day they went home. And it was kind of sad because the gentleman I was talking to there was telling me that sometimes he doesn't even come in because it's easier for him to trade at home through through their trading platform. And he said that really it's kind of a dying breed. And Maverick Trading, we do our Maverick Summits every 3 years in Chicago, and we've done them all at the Chicago Board of Options Exchange. And it's kind of sad. Every time we go there, it gets a little bit more vacant, less people there, a little bit less business. So again, but this is a professional trader. They are trading for their own company with their own funds. And then really you have a retail trader that's similar to a professional trader. They're trading their own funds again, but they're not doing it in a professional manner. They're doing it more as a hobby. And we meet a lot of people that are retail traders. And really the differences between a retail trader and a professional trader and a proprietary trader is really effort and technology and capital. That's really the difference between. So this is what a trader can be. As you can see, a lot of people are traders that may not know how to read a chart. Market makers, execution traders, they don't care. But the people that really know, again, are the prop traders and the professional traders. They're the ones that are going to be the most sophisticated when it comes to what a trader is. All right, so let's talk about the beginnings of prop trading. Okay, so prop trading, again, is where a trader trades, again, and again, I'm going to use their own strategy. So a trader isn't following orders. A trader isn't reading out of a book. A trader is making the investment decisions, and they're making decisions based on what their analysis is. Now, the way this came about is that one bank years ago looked around and said, wow, we've got all this money from depositors. So again, imagine a bank took in $30 million of depositors, and let's say they loaned out $5 million. One day someone looked and said, hey, there's $25 million just sitting there. Why don't we use it to make some extra money? We don't have enough loans to give out. Why don't we take that $25 million and make investments on behalf of the firm? So that's basically how props trading started. So what happened is banks, they went in and hired people.
Yeah, Rob, I just want to hop in here really quick. Back in the Great Depression, they had the Glass-Steagall Act that came out that forbid this activity. But over the years between the Great Depression and really 2008, various aspects of the Glass-Steagall Act got eroded away and allowed the wirehouses to be able to do this. And when you go down into your last point here about the Volcker rule, that really tightened it back up. But it was really the eroding of Glass-Steagall that allowed them to do that. And one other thing here, when we're talking about an actual prop trading firm, we need to delineate between the two of them. There's really two types of prop trading. One is institutional prop trading, and that is your large firm. Generally is going to have an office. A large stable of traders, but they're trading institutional grade capital, and that's generally defined as at least 100 million under management, and that really came about in the 1980s as well, when people were looking around and there was possibly no more upward mobility for them. If they had the institutional contacts, they may decide to go out and run a hedge fund, or if they didn't want to run other people's money. And just wanted to trade, then they would open up their own institutional proprietary trading firm. So I think going forward, we're going to have to we're going to focus mostly on what is now known as the retail prop firm.
Darren, and if you can tell, Darren kind of knows his stuff on this, and Darren became one of our traders back in 2009, and I'm telling you what, he's been just a wealth of knowledge and information. So thank you so much. As Darren said, basically the transformation was the bank started this all. They put depositors' monies at risk. Then all of a sudden it became either out of favor or illegal. And so what happened was these private trading firms popped up, and they basically said, hey, we will hire these traders. And Goldman Sachs is really the name that comes to mind. They did this better than anyone else. They didn't really start off as a bank or really a brokerage. They started out as a trading firm, and they grew into this giant financial institution from basically having really good traders. The problem is that it stopped working. The big banks got out of the business. The small companies came in, and they said, hey, we will provide the liquidity for these people that want to trade on a professional level. All right, so let's kind of talk about how that worked out. So again, the early years of prop trading, it was all done in an office. And so you really had to be in New York or Chicago, and primarily New York. And these firms, they would open up these trading floors like you can see right here, and they jammed people in side by side and said, hey, your job is to start trading. Now, the way that it worked back then is all of these trading firms were broker-dealers. So remember, we talked about what a broker-dealer is. A broker-dealer is just simply a company that facilitates the trading between an individual or an institution and the market. And so really, as you can see here in this business, in this setup, the prop trading firm was really just like E-Trade. That's really all they were, is they were setting it up. Hey, why don't you come in and trade here on this desk? We'll let you rent out this desk. We'll provide you a T1 internet line. We'll give you software, and we'll give you an internet connection, and that was it. Now, one of the things that was really popular back then were ECN rebates. Now, ECN rebates, the electronic commerce networks. Remember, I told you they came about in 1997, 1998. And of course, all of these ECNs were private companies. And they wanted to grow their business. The only way for an ECN to make more money is to have more trades done on their platform. So one of the things they did is they incentivized traders, hey, if you make 100,000 shares of orders on our platform, we'll give you rebates. We'll pay you for that liquidity. And so what happened is they started to pay this liquidity out. So of course what happened is all the traders, they flooded into these ECNs, the volumes went up, and pretty much the game back then in the early years of prop trading was you kind of tried to break even if you could. Of course you tried to make money, but as long as you broke even in your trading, you would make money from these ECN rebates. And the proprietary trading firm, they were happy if you could just break even because you just generated a whole lot of commissions. Because remember, you're trying to trade as much as you can to get ECN rebates. And so as you can see here, it wasn't very good for the trader. It was good for the ECNs, it was good for the prop firm, but it really wasn't good for the trader. And so that really only lasted a handful of years. And really the structure of the prop game was most requirers are required to have skin in the game. Back in the old days, when you got hired on by a bank, you traded the bank's money, and you really didn't have any skin in the game. But as the business changed, these prop firms said, hey, you know what? I need you. I'm going to give you X amount of dollars. I need you to have this much in there alongside of it. And then they basically gave you leverage on that amount. So the early prop firms was all about leverage. Hey, you give us 2K and we'll let you trade, 10 times that amount. And so really they talked about 10 times that amount, 20 times that amount. Now, of course, the firm could give you what leverage they wanted, and that depended on your trading experience and things like that. But again, you rented a desk with a computer, software, state-of-the-art internet connection. I know that there were prop traders in the early years that were paying over $1,000 a month for all these things. So if you take a look at, I've got to clear $1,000 a month. I've got to make as many trades as I can to try to build in my ECN rebates. You could see that was just not all that good of a setup for the trader. And again, traders could only trade equities. Back then, the options market wasn't as developed as it was. The currency market wasn't as developed as it was. And really, the only game in town was day trading equities. So when you went into the shop, you didn't even have a chance or a choice to make any other trades other than heavily traded equities on major U.S. exchanges. All right, so as you can see here again, the reason why this didn't last very long is that it wasn't set up to benefit the trader. It was set up to benefit the ECNs, it was set up to benefit the prop firm, but it really wasn't set up to benefit the traders. As you can see, the trader was cut off from trading if losses were greater than the risk deposit. So even with that, again, you can see it was very good for everyone but the trader. Next up comes the Great Recession. So really, a lot of these firms were already teetering. And basically, the Great Recession really took a toll not only on prop firms, but really all of Wall Street. I mean, we had major banks going out of business. We had the government on the edge of collapse. Well, sorry, not the government, but the financial system on the edge of collapse. The government has to come in and bail everyone out. And because of that, there were a lot of rules that were created that came out of that financial crash. And that's, it's what we do as human beings. One of the things I remember is that when we had the pipeline that broke in the Gulf of Mexico, and it was just spilling out all of that oil into the Gulf. I mean, it was horrible. It was terrible. And what we did in America, we said, okay, no more drilling in the whole Gulf of Mexico. And I thought to myself, well, geez, we've been drilling in the Gulf of Mexico for 50 years. And this is the first time it's happened, and we're going to all of a sudden now just say no more drilling? I'm like, okay, look, that's what we do as human beings. And so after the Great Recession, everyone freaked out. Every regulator came on and said, okay, we are going to tighten everything up. And so a lot of things changed. And that business model of the early prop company, it did not survive that. And one of the biggest things that really killed the old prop trading firms were the deterioration of commissions and spreads. I remember my very first trade I ever made. This was probably back in 1995, and I traded on Schwab. Charles Schwab was the very first company to offer online trading to the guy on the street. I paid $59 for my first trade, and guess what? If you were under $100 in commission, that was amazing. That was absolutely amazing. $59 was my first online trade. When I started trading professionally at Maverick, it was $22.50. That was the commission. Guess what? That's way better than $59. Look, I'm no dummy. That's way better. It's funny how everything's relative because you're probably gasping like, oh my gosh, that's a ripoff. That was a great rate back then. What happened is commissions came down to almost nothing. And if your business was determined by having those commissions in, and you didn't have profitable traders, it didn't survive. So we had a lot of the firms that have been the early movers, like the Ascent Tradings, the Echo Tradings. They got out of the business. They just left. So it came to be that trader profitability was the only way for prop trading firms to survive and be profitable. Now, Maverick Trading, we started as a broker-dealer. We actually transitioned away from broker-dealer. We sold our broker-dealer business off to Terra Nova Trading in Chicago. And we made this change to, hey, let's only take profit splits from our traders. Let's not have any commission markups. We don't want to make any money on commissions. We want to make money off of our traders being profitable. So we'd actually already made this switch in 2007. But really what happened is all the prop trading firms found out that, hey, we better help our traders make money because the old system just doesn't work. So you started seeing a lot more emphasis on training, support, risk management.
Yeah, I just want to jump in here again, Rob. I think this really caught a lot of the traditional broker-dealer prop firms by to put them between a rock and a hard place, because they had set up all their infrastructure to encourage more trading and encourage really the use of leverage. Let's give you as much leverage as possible. When you take a look at it from a professional trading standpoint, you really should be trading less than what people were encouraged to do. So they had to shift their entire training program, if they even had one. They had to shift their entire support and coaching staff, if they even had ones that were working, and get away from encouraging people to trade to really teaching people and focusing on the risk management. There was a lot of firms out there, because I remember before I came to Maverick and I was looking at a lot of firms, there are just a lot of firms out there that weren't prepared to do that. They were still stuck in the idea of this is a commission generation game. And I would probably say half the firms that I even took a look at are no longer around anymore, because they didn't put in the alignment of interest between the firm and the trader that you really need to survive in this business nowadays.
You, Darren, and I've known you for a while now. I'm guessing you researched all of them very extensively. I remember when Darren came on board, he sent us a very long list of due diligence stuff like it. This is what I need to know. I need to know this, 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 and this. And I'm like, how did he know my dog's middle name? Like, he knew my dog's middle name. How? So I'm sure Darren looked into a lot of other firms. So I'm glad that we passed the bill on that one. All right. So I really wanted to just bring about, things have changed. And so the prop firms of today, they really are about the trader. And that's great to see, because if you weren't, you didn't survive what happened in 2008 to 2012. You just didn't survive it. And so when you're out looking for a prop firm, and again, let's back up a little bit, because maybe that was a little assumptive. Listen, a prop firm is really for people that want to take trading to the next level. And it's for someone that says, hey, you know what? I don't want to just be the casual trader. I don't want to be the person that, works at a day job their whole life, and they make a couple trades on the side and they watch Mad Money on TV a little bit, and then they kind of talk about how they do some trading with their friends. You know what? That's not what prop trading is for. That's what the retail brokers are for. That's what E-Trade is for. That's what Schwab is for. That's what TD Ameritrade is for. Prop trading is for people to say, hey, you know what? I want to make this a career. I want to make this a substantial part of my income during my life, and I'm ready to take it serious. I'm ready to put in time and effort, and I'm ready to invest in it. So if that's what you're looking for, and I understand that's not everybody, and for everybody that says, hey, that's really not me, you know what? Just go open up a TD Ameritrade account and buy some Tesla, complain about it when it goes down, and just do your thing. That's cool. That's totally cool. But look, if you really want to get into this business, then really you need to make sure that you're looking for the right things in a prop firm. Number one, I'm going to point out sustainability, or suitability and qualification testing. One of the things that has really hurt traders is that in the prop firms of the past, anyone with a pulse and a risk deposit was allowed to trade. Here you go. Here you go. Here you go. Go ahead and do whatever you want to yourself. We're not responsible. So really, there should be some suitability and qualification testing, and it's pretty crazy that we don't have that. Again, you want a firm with good software and technology. Again, your trading platform is going to be very important. Trading software, charting software, all very important. And of course, cost is going to be a big deal too. You want to take a look at the cost of those things and make sure you're getting the best for the cheapest. You want to make sure you have a good support and coaching staff. We'll talk about that here in a second, why that's such a big deal. But trading is a lonely, hard game, and you're going to need some people around you somewhere in your trading career. again, regular meetings, this is something we do at Maverick. I'll tell you a little bit more about that later. But again, this is just all by yourself. The trader that is just by themselves in their office at their house, clicking buttons, all by yourself. No one's watching over them. That's really dangerous. And what happens is you make a lot of mistakes. You trade out of boredom. You blow your risk control because there's no one there to knock you over the head when you're being stupid. So again, so important. Again, risk management, that is the name of the game here. So again, you want a firm that has risk management. Of course, a firm that provides you trading capital. People ask me all the time, Rob, how much money do I need to start trading? And I always say, like $200. Like, I don't know what the minimum is at the brokerages now. Maybe $200, $500. That's the minimum. And they go, no. I mean, to make money. How much do I need to make money? And I always say, look, you need $100,000 if you're going to be trading equities, minimum. You need $20,000 minimum if you're trading forex or futures. That's just the minimum. And they always look at me like, oh, that sucks. But yeah, it does take a while to get that. But again, this is what a great thing about a prop firm is they have the capital. They have the capital. They want you to use the capital. You just want to make sure that you know how to use it properly. And of course, the way the prop firm works is you become a trader for the firm. You trade the firm's capital, and then you keep a percentage of your profits, and the firm keeps the other. So let's really go down this list because I want to make sure when everyone goes out and does due diligence like Darren did, Darren, the king of due diligence, I want to make sure that you know what it is you're looking for.
Yeah, but you're stuck with me now.
That is true. I did not do my due diligence on him. I just kidding. No, I trust me. There's no due diligence to do on Darren. He's the CEO of Maverick Trading now, and I'm just the janitor. So here we go. All right. One of the crazy things about trading in general, and I'm not just talking about prop firms, I'm talking about everyone. TD Ameritrade, E-Trade, Schwab, everybody. They will let anybody open up an account, put their money in it, and be an idiot. And then they'll say, oh, it's not our job. That's not our job. We're just the middleman. It's not our job to make sure that you know what you're doing. We'll let you ruin your life savings. It's not our job. So it's just crazy that everything in this world that we do, if you want to do surgery, if you want to be a doctor, there is so much you need to do to prove your proficiency. You've got to go to med school. You've got to do residency. You've got to pass tests. You have to prove that you are capable of doing surgery. If you want to be a lawyer, you can't just decide to be a lawyer one day. You got to go to law school. You got to pass the bar. You've got to prove that you have what it takes. And again, I know those are pretty, okay, doctors, lawyers, to cut someone's hair. Do you realize that to be able to cut someone's hair, you can't cut someone's hair professionally unless you go to classes, do practice, and get qualified and certified to cut someone's hair. So in all other professions, we have all these, okay, this is what you need to do. But you know what? TD Ameritrade will say, oh, just put some money in and just go for it. And again, it's really dangerous to people. So again, the prop trading firms of the past, they kind of did this. They let anyone in the door, and they said, just go for it. And of course, most of them failed. And they said, oh, well, we made our commissions and we're happy. So I like trading firms that have some upfront commitments and basically have it to where you have to prove proficiency. I know at Maverick Trading, we have 3 requirements for people to trade live for the firm with the firm's capital. They've got to pass our online tests. They have to develop a written trading plan and submit it to management. And they've got to trade 2 months in a demo account and show profitability. And again, if they're already trading in a demo account or they've been trading in real life, we just need to see the last 2 months of statements. That's it. So basically, we're saying, okay, let's make sure that you know at least what you're doing. You've passed tests. And again, if you need help passing the test, we've got tons of training programs that show you everything. But again, let's see you pass tests. Let's see you put together a written trading plan that says, this is how I'm going to trade. This is what I'm going to do when X happens. This is what I'm going to happen when Y happens. And this is what I'm going to do when Z happens. To where you've already pre-planned out everything. And then you've shown us that you can actually follow that trading plan. Once you do that, guess what? You're able to trade firm capital, Maverick.
Yeah, I just want to touch on the trading plan here really quickly, Rob. What before I came, I had a trading plan in my head, and of all the people that I've talked to over the years I've worked here, they've really liked this idea of a trading plan. And what we found is that when things are going against you, people can be like a deer in the headlights. They don't know what to do because they haven't planned it out beforehand. Having a written trade plan this is the business plan of how you are going to trade the firm's capital, how you are going to make money, how you are going to support yourself as a trader. And you should always plan that exit, but you should also have some contingencies in place. And I've spoken with people that had been trading, either floor traders before. Some were former market makers. Some people had been out on their own. A couple that were execution traders for hedge funds, and they told me I had never had a written trading plan before, and I was running large amounts of money. And this is one of the best things that I've ever seen, because when this position went against me, when the sector rotation occurred, I was able to just calm down, look into my trading plan, say, I've already thought this is what I'm going to do. And it was no longer a question of what am I going to do? It wasn't even a question. It was, this is what I'm going to do. And we find that people are able to get out of bad positions much more quickly, realign their portfolios much more quickly, and actually trade with a lot less stress. So we really need to stress. If you're looking at another prop firm, make sure that they require you to have a written trading plan.
It's just crazy that we don't do that. I mean, if you think about it, like being able to have someone drive a car, like you have to take classes, you have to pass proficiency tests. Like it's such a dangerous thing to allow people to just put their money in and trade these markets, because trading is tough. Trading is tough, and it takes some time and effort. Right. Next thing you want to make sure is make sure to look into their technology and their software. So first up is their trading software, their execution software. So every prop firm is going to have a different trading software. Some are going to use things like Lightspeed. I know we started with Realtic. We're now using Trader Workstation. But really what you want is you want a platform that has good, fast executions and that can handle what you are trading. So the style of trading is going to determine what your trading software needs to have. Again, you're going to need good charting. All trading nowadays is based on charts. There's no more, just trading off your gut. That never worked. Everything is done off of charts. So you need good charting software. You need good accounting software, journaling software. And again, if you have any sort of, communication software, what I mean is like, if you are having meetings or chat rooms or things like that, make sure that software is up to speed as well. A big part of your career and your life in trading is going to be done on software. Those are your tools. So just like a builder, you want to make sure you have the right tools for the job. In trading, you want to make sure you have the right tools. And let me stress again, trading software. And let me also make a little push for mobile trading. I absolutely love mobile trading. So make sure that your firm has mobile trading available, because I remember when I first started in this business back in 1997, I was basically chained to a desktop. And remember, you couldn't get all we had was flip phones back there, and you couldn't get internet into your house other than dial-up internet, so you couldn't trade it at your house. I had to be at the Maverick Trading office to make a trade. I had to be there. And so from 7:30 to 2, I'm on Mountain Standard Time, I had to be there. And I remember several times being out with my wife and saying, hey, I need to be back at the office before the market closes. And she didn't want to leave. She's like, oh, no, I don't want to leave. I'm like, whoa, wait a second. I do not want to hold these positions overnight. They've got too much risk. I need to go. So I would end up having to drive to the office, close out my trades, and then come back and pick her up, sometimes 20, 30 minutes out of the way. I love mobile trading. It has allowed me to have a much better life. And again, it allows you to do all these amazing things. So, I have now traded all over the world. I remember I was trading in a cave hotel in Turkey, in central Turkey, in Cappadocia, when Bear Stearns went out of business. And I remember making trades to go there. I've traded in Easter Island, out in the middle of nowhere, which was just crazy. And I remember when Donald Trump became president, I was in Germany, and it was like 2 a.m. there, but I was right there trading. It was all able to be done on a laptop or a tablet or a mobile. So again, highly recommend just make sure that you have mobile. It makes your life so much better. I'm so happy about mobile. If you can't tell, I think you can tell that it's changed a lot. All right, trader support. All right, so trader support, again, this is where you want to have a team with you. As I said earlier, trading is a very lonely game, and having regular meetings to go to really help. And then one of the things we love to do at Maverick is we love to meet. We love to meet with our traders, and so we do group meetings. And specifically, every single week, we always meet on Sunday night, and we get ready for the week ahead. We have our trading room, which is our stock and options division, at 9 Eastern Time, and at 10 Eastern Time, we've got our FX division. And basically, we talk about the trades we're looking at making for the week and the outlook we have for the week. And then we have another session, we call it the midweek update on Wednesday, where we basically say, okay, this is what's happened in the past couple of days. This is how we're changing our outlook. These are some of the trades we're looking at now. Now, we do those every week, and then we're always meeting in between those, sometimes with just education classes, sometimes with Q&A classes, sometimes with training sessions on software. But again, it really helps a trader be involved in trading. Instead of just being at home all by themselves with maybe a book or two, it allows them to really be part of something. And then when it comes down to it, all of our traders have access to individual support. So if you need help on charting, guess what? We have a charting specialist. We'll help you with charting. You're having a hard time putting together a call ratio back spread, or you're having a hard time even knowing what that is. We've got a specialist that we can set you up with, and you can have a one-on-one session with them to go over it. Psychology sessions, this is a big one, and this is one that I like to do with our traders. Trading psychology is so important. It takes about 6 months to learn what I call the X's and O's of trading, but it takes a couple years after that to really get your psychology down. So this is a big part of Maverick. We work a lot on, okay, this is how you're likely going to feel when this happens. And when you feel this way, you're likely going to make this mistake. Now, if you know that, and then you start to feel that, all of a sudden, you now have the power to choose differently. And we actually go through, this is the choice you want to make. Or better yet, as Darren said, why don't you fall back to your trading plan where you already decided what you were going to do. So again, everything is there to, again, help our traders become the most profitable they can. Because in the end, they, our traders are our biggest asset. If our traders don't make money, we're not going to make money as a firm. All right, so again, analysis of trading results. One of the things that's always important, like a coach, coach is always checking in on you, making sure, okay, did you go a little bit further today? Did you do a little bit more? If you're in athletics, hey, did you run a little faster today? Let's look at your results. Let's analyze the tape. Let's look and see what you did wrong. And it's all in the support of improvement and getting better. All right, now this one, I really just should have spent 30 minutes on this one alone. This is everything. Now look, I have been trading for over 20 years now. I have no idea how many trades I've made, but I know it's probably at least over 50,000. It's at least 50,000, if not more. I've made money on a lot of trades. I've lost money on a lot of trades. I've broke even on a lot of trades. I've had trades that were spectacular winners, and I have trades that were abysmal failures. That's the name of the game. Risk management is where you win, because I don't care what system you use. And this is where whenever we have traders put in their application for Maverick and they say, okay, well, I've got this strategy that's 95% accurate. Okay, what happens on the 5%? Oh, it's a blow up. It's a real, you know what. And it's like, well, that doesn't work. I don't care if you make money 19 out of 20 times. If you make $1 19 times, but on the 20th time you lose 500, it's not a good strategy. It's not a good strategy at all. So risk management is absolutely huge. So we focus a lot on this. It's why we love options trading. Options trading allows you to put yourself in situations where your reward is guaranteed to be greater than your risk. It's amazing what you can do with options. And the biggest thing about risk management, and I'm a big believer in this, it's called forced discipline. All right, forced discipline is basically when you don't want to do it. So remember when you were a kid and you didn't want to do your homework, or you didn't want to clean up your room, or maybe you didn't want to eat your peas, and your parents made you do it, and you're like, what'd they do? And then you realize as an adult, those things are pretty important. Actually, eating your peas is not important, so scratch that one. But finishing your job, finishing your homework, cleaning up your room, your parents were doing that because that was what you needed. You needed to turn into a fully developed adult that knew how to clean up after themselves and to go to work. That's what that was about. That's what your parents were doing. It wasn't about they were doing it because, they were just wanting to yell at you. They wanted to make sure that you knew how to get your work done. And so, just the same thing as a starting trader, as a beginning or intermediate trader, you are going to not want to do risk management. And what I mean by that is you're going to have a position go against you, and you're going to say, well, I bet it's going to come back. I'll let it go. This is where you need someone to step in and say, okay, what are you doing? Let's talk about it. And then you're going to be like, well, I don't want to take this loss. And then we're like, okay, well, how about this? Why don't you take half the loss and then take the other half here? Again, we'll work with you. We'll talk with you about, okay, well, how do you mitigate this risk? Or maybe we say, hey, why don't you just go ahead and buy this put option, and all of a sudden your risk is gone and you don't have to worry about it anymore. To have someone there looking over your shoulder, especially in those times when you don't want to do the right thing. And that's the hardest part of trading, is that trading forces you into some bad situations. And the market's very good at it. And to have someone there on your team show you, hey, look, if you sell this call here and then you buy this over here, you can turn this into a minimal loss if things go against you. That's where you need the help. So again, you need a risk management partner that's watching your trades, watching your overall risk profile, your account balance, and everything. You need some help here. And again, this is just the number one thing. So when you look into it, make sure that they have really great risk management.
I think one other thing to talk about here is, for a trader that is not trading with a plan or is new to trading as well, sometimes when a bad thing happens to a position or a portfolio, the trader can't see the forest for the trees. And you really need that second set of eyes that is dispassionate about the position, that can take a look at it and show you some options. There, like Rob said, there may be some more options rather than just booking the loss or having to sell, having to buy. We can do different things. We can change it up with options. We can do a different offsetting position over here. You can hedge out the whole portfolio. So it's important, even if you are versed in that, sometimes you don't realize the options that are in front of you. You get what we call target fixation. You're focused on one thing that might not be palatable for you to do. You need someone else to come in and say, well, you've got, option A is one thing too, but you also have option B, C, and D. What's going to work best for you to get out, to get through this and move on? You always have to ask yourself, and Rob is very good about saying this. He said it to me, several times. If I've been in a position that has not been working out and I've been bullheaded about it, he's asked me, is this the hill that you want to die on? And the answer is universally no. So sometimes you need someone else to ask you that question and to bring you right back on track so you can live to fight another day, really.
I always say that. I always say, look, people usually say, well, I got into this position because I felt this and this. And now they're like, it's going to be the position that kills them. Like, wait, are you really telling me this is the hill you want to die on? This is the stand you want to make? And they're always like, no, you're right. This was a bad trade. Let me just get out of it. And they get out of it. And they move on and they make the money back. So I do like that saying. Is this the hill you want to die on? All right. So, of course, a prop trading firm, the big benefit is they provide capital. So when you're looking into a prop firm, make sure they provide enough capital out there to make it worthwhile. I'm definitely not going to name any names here. So you're going to have to do your own due diligence. But there are some firms out there that are prop firms. But basically, they're going to start you out with a very small amount. Like $100, $200, $500. Now, look, and they're saying, look, you should be able to make money on $200. And they're right. They're right. You should. If you're a good trader, You can take that $200 and turn it into $250. Now look, that's a 25% return. That's a really good return. The problem is it's 25 bucks. And so there are some firms out there that will basically give you small amounts. But look, all the firms out there, if you prove to them that you are good at trading, they all want to give you more money. That's the point, is they all want to give you more money if you're going to be a profitable trader for them. But some are going to start you out with really small amounts. So I would definitely ask about the amounts you're going to be starting with, and make sure you make your decision on that. The trader should have a clear understanding of what it takes to trade with more capital. So again, what does it take to trade with more capital? At Maverick Trading, we make it very simple. I was going to say very simple, but then I'm going to have like 5 caveats. Very simple, meaning 2 consecutive profitable months earns you a capital increase. Now, again, we have what's called the high watermark. I don't want to get into that, but again, it's 2 profitable trading months above a high watermark. If you don't know what high watermark is, look it up. You'll probably get some pictures of some flooding that was in Pittsburgh in the 70s, but anyway. All right, again, make sure you know what the profit splits are, and the profit split should be in the benefit of the trader. So really, the industry standard right now is somewhere between 70 and 80% goes to the trader. Some firms have lower and some firms have a little higher, so just make sure that you understand what the profit splits are. And then traders should have bonuses for outperformances. So again, it's one of these things where you want to make sure that you are getting compensated for the work that you're putting in. All right, so let's kind of go ahead and kind of wrap this up. The first thing you want to decide, again, thank you very much for joining us. And hopefully you've learned something about the market, about trading, about prop firms. But really the biggest thing you need to ask yourself is, okay, am I more of an amateur trader? And that's fine. Look, I'm not here to say what you should do. But being a real professional trader, it's not an easy career. It takes time and effort, and it takes training, and it takes everything it takes to be successful in anything else. It takes effort and time. And if you're not really going to do that, then you know what? Open up your E-Trade account, put some money in it, play around. Again, I already know you're only going to trade Amazon and Tesla. And I mean, this is Netflix, so you got to trade Netflix too. But that's fine. That's fine. But if you really want to be a professional, where you say, hey, you know what? I am going to make this a major source of income for me in my entire life, then you really should be looking into a proprietary trading firm if you don't have a boatload of capital yourself. Just make sure you're looking into the right firm. Make sure it fits what you're looking for. And make sure it fits your trading style. Again, most prop trading firms of today only do equities. Some do options. We specialize in options. We're like the opposite of every firm. We specialize in options, and we do equities on the side when needed. Whereas other firms, they'll do equities primarily, and they'll do some options on the side. If you are a futures trader, make sure that the firm you're looking into allows you to trade futures. If you're a Forex trader, make sure you are with a firm that allows you to do Forex. If you don't know what kind of trader you'd like to be yet, well, then look into it. Call around and see which ones are going to have the best training programs for you. Because in the end, even the most experienced traders, I have people that come into Maverick that have years and years of experience, and they watch one of our videos, and they say, oh my gosh, I never knew that. Yeah, guess what? I'm still learning. I am still constantly learning. I've been in the business for over 20 years now. I'm still reading books. I'm still trying to figure things out. I'm still learning new softwares. I'm still trying to learn how to program better. I'm trying all these things because that's what it takes to be successful long-term in this business. Make sure they have good support staff and, again, access to capital leverage. Then, of course, like everything, not just with a prop firm, but everything, just make sure you have an understanding of all the costs. Because there are people that come to us and they say, well, I just want to trade totally for free with no risk on my end. And we say, we thank you very much. We love you, and we wish you the greatest of success. And good luck finding anyone who is going to give you capital for free with nothing on the hook. So all the firms are going to have costs. Make sure you have a firm understanding of all the costs and commitments it's going to take on your end. So ask questions. And if the firm is reluctant to answer those questions. Again, I don't want to tell you what to do, but I think that tells you what to do. All right, so let's do one last pitch here. Maverick Trading. We have two separate divisions, options and equities. Our options and equities division is called Maverick Trading. Our Forex division is called Maverick FX, Forex and Futures. So we would love for you, for the fact that you came here and saw this, we would love to invite you to our trading room. We would love for you to come and see what we do on a weekly basis, what we talk about with our traders, and how our traders interact with us. So if you are interested in that, you are going to be reached out to by one of our recruiters. They're going to send you an email and basically say, hey, thanks for coming to this and watching it. Are you interested in a 7-day trial? Are you interested to join us in our FX room or our trading rooms? Look, come see what we do. We've been doing this for a long time. I really like how we've put everything together in this firm. So come in, take a 7-day trial. One of the things I always tell people is go take our trader personality test. That's really interesting. And it's the first thing we have our traders do when they come in as new traders in Maverick is take your trader personality test. It's based on the Myers-Briggs personality test. And then basically, when you figure out your personality style, we'll tell you, hey, these are all the mistakes you're likely to make with your trading personality. These are the things you're going to do well. These are the things you're going to not do well. And you actually start your trading plan. The first thing you say is, what is your personality style? And then you basically build your trading plan around your personality style. So if you are an extrovert, you already know that overtrading is going to be one of your downfalls. So you're going to start writing your trading plan right away of how you're going to avoid overtrading. So it's just, to me, it's a very interesting thing that's very proprietary to Maverick. And again, of course, we're always looking for traders. So if you are interested in becoming a trader for Maverick, just go onto our websites, click the apply button, and we'll take you through a series of videos and information. And then basically put in your information, and a recruiter will reach out to you and start the interview process. That's all I have for you. Darren, do you have anything for anyone?
No, Rob, I think you covered it pretty well. Again, thanks everyone for coming. And as Rob said, the recruiter is going to reach out to you, see if you're interested, and be able to answer any other questions you have. And we look forward to seeing you in our trading room this weekend. Thanks.
One last thing. Darren wrote a very, very substantial paper. So if you want to just fact check me to see if Darren knows how to do due diligence, Darren wrote a research paper. I'm going to call it a research paper. He wrote a research paper on the history of prop trading, and it's on our website. Go to Continuing Education and go to History of Prop Firms. How many words is that thing, Darren?
About 6,000, I think.
That's it? Just 6,000? Or I thought it was 60,000.
No.
It needs more pictures, Darren. It needs some pictures and some animations. All right, so go check that out. Hey, thank you so much for joining me. I love to talk trading. I hope you can tell it. I will talk trading. Even if there's no one left to listen to me, I'll probably still be talking about it. So thank you so much for joining me. Everyone, take care. Goodbye.